Hello, this is Megan Horneman, the Chief Investment Officer for Verdence Capital Advisors, and we're coming to you today with some information about the Federal Reserve Chairman's semi-annual testimony to Congress. So obviously this happens twice a year, and Congress gets to grill the Federal Reserve Chairman over the actions that they've taken over the past year. There were really three main takeaways of what we've seen thus far in this testimony. First of all, he's made it very clear he's not done raising interest rates, and the committee doesn't see that either. They have a long way to go to get inflation to where they want it to be. The second thing is there were some concern over the fact that raising interest rates so far, so fast, would really result in some significant job losses. And he just reiterated the labor market's strong, unemployment rate is very, very low, labor participation is picking up. And last thing that was a big question in the meeting was about banking regulation. Remember, earlier this year, we had a lot of turmoil in the small and mid-cap banking system, and the regulation that obviously it's needed in some respect, but he surprisingly told Congress that it wouldn't be regulation on the small banks, and that's really where the turmoil started. In fact, if there is any tightening or increased as far as increasing capital requirements, it would be in the large banks. But again, that's a long way away. It takes a very long time to get regulation put in place. So to sum it up, the Fed didn't really say anything that surprised us except about the small banks. Interest rate hikes are not done. They have a long way to go to get inflation under control, and we're seeing that in the reaction in the equity markets, which are actually lower since he's begun speaking because of the fact that they are starting to price in now higher interest rates for longer. That's all I got today. If you have any questions, comments, or feedback, please feel free to reach out to @podcast@verdence.com. Thank you.